Okay, so welcome to this Sunday stream. It's been a while since I've done a Sunday stream, probably because I've been a bit stressed out lately, but I'm back now. So today we are going to get into long-term investing. Now, I'm sure this is something a lot of people would be interested in, but I don't think it's a topic that is well understood by many. Now, I always like to relate long-term investing and long-term, anything that's long-term, right? I always like to say that it's really simple, but it might not be easy. And that's why so many people fail with long-term investing. So in this live stream, hopefully, I'm going to give you guys a little primer. Now, I don't want to call this the comprehensive guide. You're probably going to learn more here than you're going to learn in like some free YouTube resource, but I would say this is still a pretty preliminary introduction to long-term investing. So don't take this as the be-all end-all, but rather take this as the introduction, the gateway, basically, if you may. Now, in this live stream, I have not prepared slides, so this is going to be more of a talk rather than something that is very visually appealing. So try to listen to me more than it's not going to be visually appealing, so just try and listen to me, all right? And more importantly, I'm going to try to get through most of the questions first before I start taking questions. So if you do have any questions, save it for the end of the live stream, and I'll answer it one shot there because I don't want to be distracted looking at the chat. The letters are small. I see. Is there an issue for the rest of you? Does this help? Wow, okay. That's a really tiny part of my screen. Is this big enough? Is this good enough? The dichotomy of ultra wide users and 16:9 users, eh? Is this too small? Would this be too small? Alright, if it's good for everyone, then let's dive into it, I guess. Ah shit, I overbrewed my tea. I was setting the stream up and I forgot I was brewing tea. Fuck. Well, anyways, since the technical issues have been over now, let's dive right into it then. So long-term investing. Before we get into this talk at all, I just want to make a general little disclaimer that while the concepts discussed in this live stream will be applicable to like stocks and forex or any general kind of investing or even dividend investing. A lot of the concepts here can work for those, but specifically, I have tailored this live stream to fit more of crypto. Because crypto, I don't know if you guys realize this, but it works kind of differently than many other coins or like many other industries, if you may. So let's start off this discussion or like this stream with what is long term, right? How do you define long term? And this can be different for many people, but I would say long term by essence means at least like you're supposed to have at least a 1 year outlook, right? At least, and that is on the low end. Right, preferably it should be like 3, 5, 10, 20. I mean, 20 is on the high end, right? 20, 30 years. That kind of an outlook is on the high end. I would say that's not very applicable for most people. So for most, they might fall into the category of long-term as a 1 year to 5, maybe 10-year span. For me, long-term means at least a 5-year span and up to 10 years. And I will get into a little bit more about this kind of thinking later, but for now, long term, we will define it as anywhere between 1 year up to 10 years, right? So then the second thing is goals, right? If you guys can see that. So the reason why I type here goals for long term, right? The reason why goals define what is long term is because your goals when you are doing a long term form of investing / trading is going to be wildly different from if, let's say, you are day trading or swing trading, where you're just trying to catch like a swing for multiple weeks, maybe a couple of months. Long term means that you have the bigger picture in mind. So it's like a lot of these short-term price movements, and by short-term I mean anything below like 3 months or 6 months, that's considered short-term, right? That's just swing trading. Maybe you could consider that mid-term, like price action. Anything from short-term to mid-term is not going to really, you shouldn't really be affected by it, right? Because when you are long-term investing, you have the bigger picture in mind and you are looking towards into the future. And so this is why goals like shape long term. So usually, actually right now, I'm just talking from like this framework that I've made. So if I do lose my thoughts a little bit, pardon me a little. So then now we have to consider like, hey, is long term a good fit for you? Should everyone be doing long term? And well, let's start off. Let's just go by the list, right? The personality type. Not everyone is suited for long-term investing, especially the really impatient people, especially the ones who want to get in come out, who wants to go into the market, get a 2x in like 2 days, or maybe a 5x in 5 days, and then they want to get out, right? That's the kind of people that are not really suited for long-term investing. The second type of people that probably ain't going to be suitable is people who like to panic a lot. Now, this is something that you can train, right? Your mentality and your mindset of not panicking when, the market's doing its thing. It can be trained, but just be aware that impatient people, especially impatient people, or people who aren't good, like forward thinkers, right? People who can't think to the future, just, visualize a better future, visualize a future where crypto could be way bigger than it could be right now, right? Or maybe you just don't believe in crypto and you just want to trade it because crypto moves really well. You get, like AXS, you get a 13x in 1 month. Most traders would be really happy with that kind of volatility. So if that's what you're looking for, then maybe don't consider long term, right? And then you have your lifestyle. So it's this kind of a long-term trading, long-term investing kind of thing. It's going to be really good for people who are really busy because it's, again, as I said in the beginning, long-term investing is simple, right? But it might not necessarily be easy. The distinction between those, I do hope you guys understand what is the distinction between both of them. But especially for busy people, right? If you have, let's say, a 5-year outlook and just consistently coming in and investing, maybe check on your portfolio, maybe every 2 weeks, every month, just do a quick checkup on your portfolio and you can get on with your busy life, right? For people like that, this is going to be a really good fit for you. But for people who, let's say, people like Muffin Man, right? They are doing 50 scalps a day, that kind of stuff. They're always in front of the computer. They have the time and the free, the mental capacity to be in front of the computer all day, then I would argue that a short-term method of trading would be much more profitable for them, right, in particular. But if you do not have the time, then stick to long-term, right? There's no definite answer like, hey, because you're trading short-term, you're going to get gains quicker, right? That's not how it works, right? Everyone can make money. There's 999 different ways you can make money in the markets. And that's what makes it beautiful. You don't need to, just because I'm teaching, say, trading, doesn't mean that you can't make money investing, right? It's the beauty of the markets. Anyone could have their own weird kind of plan. Like maybe you only invest $69,000 every April 20th and you do that for 5 years, you'd probably be profitable, right? That's the beauty of the markets. And then goals. Yeah, so I use goals again here because not everyone is trying to think on a 5-year or maybe even a 10-year timeline, right? Sometimes you might be in a tight financial situation. You are looking for trading to be that salvation for you to, liberate you from having to go to a job that you hate or whatever. Then for those of you who want to make things happen fast, then this is not for you, right? Or at least at the moment, it's not for you. And I would even argue, right? Most of you, if you are not making, consistent amount of money, maybe a good amount of money, you might not want to get into long-term investing that quickly, right? And of course, there is that saying, right? Time is on your side when you're investing, especially long-term. The sooner you begin, the more that you can let time do its magic. I'm sure you have all heard that saying before, right? And I'm sure you have all been bombarded with the kind of quick math. Like, hey, if you started investing at 20 years old compared to 30 years old, by 60 years old, you're going to have this. Now, that is fine and dandy and all. But in crypto, I would say it works just a tiny bit different. And I'll explain what I mean by that later. So, should everyone consider long-term investing? My short answer is going to be yes, right? Even though what I just said, that I still stand by what I just said, but everyone should consider long-term investing because here's the thing, right? You're going to be able to make a lot of money trading, right? I do not deny that. I am a full-time trader. I can testify that you can make money trading. But for most people, especially if you have just started, and even for me, right, you have to understand you don't immediately grasp this concept immediately, right, when you first start out trading or maybe when you first start out investing / staying in the markets. But over the long term, right, once you've been doing this for a year, 2 years, maybe even 3 years, what you realize is that saying, right? I'm sure all of you have heard that rule before. Rule number 1 of a successful investor is don't lose money. And rule number 2 is remember rule number 1. So what I mean to say is that once you've been at this game for a bit of time, what you come to realize is that saying has always been true. it's not something you understand immediately when you first jump into the markets. But once you've been at this for a while, you understand that, hey, it's really not about making money, right? Because the gains will come. And especially once you get to what I would like to call the tipping point, where, you know, your gains are like, your portfolio size is so big that just the tiniest bit of percentage points is, you know, enough for you to make a full-time living, and a very comfortable one at that. Someone's saying the stream is full. There are more than 50 people here. If that's the case, right? Could somebody with a good Wi-Fi connection? Wait, no. TD, you can still get in. Somebody with a good Wi-Fi connection. Go share your screen, right? On the bottom left of your Discord, you can see it. Oh wait, I don't think you guys can stream in live. I think I'm the only one who has permission to do this. Is there anyone who has like a really good Wi-Fi connection and is willing to stream, to share their screen? Just volunteer so I can give you the... I have 50 MB fiber. That's all that needs to be said, right? P1P Wims, yeah. Rich, do you mind just giving him permission to share his screen? And then P1P can just share his screen, and the people who can't watch my screen, you guys can watch his screen. Man, this is an issue I really need to figure out. I wasn't expecting this Discord to fill up so quickly. But then Discord should really allow like more than 50 people. Oh yeah, Rich, you can go ahead and give Airdrop the role as well. In fact, you can give Sparky and Dean the role as well. I mean, these guys are going to be always around. Even Raymond set it up to 100. Up to 100 people can listen to it, but only 50 people can view the screen, if I'm not mistaken. No, I think you give them individual permission to share their screen. Okay, I'll do it. I'll do it. Yo, P1P, try sharing your screen. See if that works. I've given you the permission to do so. So basically, when you share your screen, just share, if you're looking at me, then you share your screen, then other people can look at your screen. And then just make sure you mute yourself. Try that out, guys. I believe as long as P1P keeps his microphone muted, you guys will be able to hear me. Does it work? Testing, 1, 2, 3. I don't think there's echo because he's muted. Or you can just turn off the audio on his stream so that you only have one audio source and not two audio sources. Yeah. So for anyone who joined the stream late, you guys can view P1P. Thanks for doing this, by the way. So where was I? Right. So for most of you who are here, right? I'm sure you're in this for. I don't know if you guys are in this for the long game or not, but there is a rule that I like to keep to myself. And I would recommend most people, like 90% of people here, should have this rule as well. In fact, probably 99% of you. For the odd person who isn't able to follow this rule, then I'll get to you later. But for 99% of people, I do believe that you guys should stick to some sort of I call it 80-20 or 85-15, or maybe even a 75-25 rule. So by this, I mean that 80%, right? For most people, 80-20 works. Right, for most people here, 80% of your total portfolio, I actually recommend you to keep it in spot and as a long-term as a long-term hold. Right, it doesn't even need to be long-term holds, but just keep it in spot. So there's a couple of reasons for this. Firstly, remember what I said earlier about in investing terms, there's that saying that time is in your favor. Well, time will be in your favor as long as you're not using leverage. For example, if you simply buy spot, right, a majority of your holdings you are, trading using spot, then it doesn't matter if Bitcoin drops from 60k to 12k. It doesn't matter, right? Even though if you bought at 60k, the only different, you have time on your side, basically. You could come back 5 years later and Bitcoin's going to be like 200k. But if you were, let's say, on leverage, then no matter what kind of leverage you are going to be on, you are taking on an element of risk, which is why for long-term investing, I generally do not recommend using leverage, right? You want time to be on your side. Again, for most of you, this is not something that is easy to wrap your mind around. But once you've been at this for a while, you realize the key is to keep your money. It is not to make money, right? That becomes less important, right? Anyone can make money. Not everyone can keep their money, right? Which is why you want to use you always want to follow this rule, right? 80-20, 85-15, maybe even 75-25 at most. So basically what happens is you're going to be using 75% of your portfolio as spot, right? You could either trade or you could just invest. And then with the 25% of your remaining portfolio, you use that to trade. Right, you use that to go do your degen futures. You use that to ape into BSC shitcoins, whatever. Right, do whatever you want with 25% of your portfolio. Understand that even if you were to lose all of your trading funds, you would still have your spot holdings. That is the beauty of following this rule. Right, you could literally fuck up like majestically and you would still have the majority of your account intact. In this case, some people might ask, hey, what about the risk, right? I say the risk 3 to 5% of your account at any given time. You should still apply that as well, which means if you're trading with, let's say, 25% of your portfolio, and if you're taking 1% account risk every time, then at max you should have about 25 trades running. It still applies, right? Let's say you were taking 4% risk, account risk every time, then at maximum you would have about 6 trades, right? It's important to go, when you're trading, it's important to go small enough that you are still managing your money, but not so small that you're trading with like $10 positions with a $10,000 account, right? That's too small. There's a balance that you need to strike. So generally, the way that you can envision this is, well, actually, I'll get into that later. But for most people here, right, if you want to be successful at this, right, if you're serious about doing this trading thing, or even just crypto, more so trading, right, more so being successful in the markets over the long run, you're going to want to do this, right? At the beginning, when your capital isn't big, maybe your mindset is a little small, right? And I'm not trying to insult anyone here. I'm just trying to put it into perspective, right? There's a few things that you don't really grasp until you've been at this for a while. It's hard to give relationship advice to someone who's never been with anybody, right? Maybe this is his first girlfriend or whatever. It's really hard to tell him, hey, this is what you should be doing, right? It's hard for them to understand the essence of what you're trying to say. And right now, what I'm telling you is that coming from the future, one of the most important things you realize when you've been at this is whether or not you're able to keep your money. Because especially in crypto, where things can 13x, 100x in a year, making money isn't the hard part, right? The hard part is keeping your money, right? Not taking on too much unnecessary risk and risk losing it all once you've made it. You know what I mean? So Dean, I'll answer your question in a bit, Dean. So should everyone consider long-term investing? Yes. And this is the guidelines that you should follow, right? In my personal humble opinion, right? This is the guideline that you should focus on. So before we get into the technicals, there's a couple of things that we need to discuss. And there's a couple of things that you need to define. And that is the first one, which is very important, right? You need to have a goal, okay? Not just when it comes to long term, but in trading in general, right? I always say, have a plan, right? Have a goal. If you fail to plan, then you plan to fail, right? So it's really important that you define your goal right from the get-go before you even get into anything else, right? So if you see these 3 words here, I write 10-year, 100x, or flip. So, man, I should have ate some salt. I'm getting thirsty already. So this is what I mean when I say 10-year. So there's a few goals there's a few general categories that people, when they are doing long-term investing, they tend to fall into, right? There's just a few categories. The first one is what I call general long-term investing. Let's say you believe in the power of crypto. You believe in what crypto can do for the world, right? You believe that with crypto, the world can be a much better place. So then you believe, right? You have to identify, right? First is what kind of a time frame are you looking at, right? What is the outlook that you're having, right? If you have what I would recommend, again, when I mention long term, for me, long term means at least 5 years and up to 10 years, maybe more, right? At the moment, I cannot imagine 10 years from now, so it's hard to visualize that. But 1, 2, 3, 5, 10 years, right? If you simply just believe in the power of crypto, then you have to understand that as crypto becomes more prominent, fiat is going to lose, its allure, right? Its strength, its power, right? Maybe in the future, who knows, everything is going to be denominated in some stable coin or CBDCs, God forbid. Or maybe everything will be denominated in Ethereum or even Bitcoin. So with that in mind, would it make sense for you to be thinking in terms of a fiat-based thinking, like thought system, right? Should you be thinking of, hey, my portfolio is worth $200,000? Doesn't really make sense, does it? If everything's going to be denominated in, say, Bitcoin, then what you want then is to define your goal, right? Over the course of maybe 5 years, 10 years, then you want, let's say, I want to build my Bitcoin equity. I want to own a lot of Ethereum because Ethereum is starting to become deflationary, right? After the London hard fork, maybe I believe that, hey, ADA could have a real shot at really changing the world with what they're doing with Africa and many other countries, with the kind of infrastructure that they're trying to build. I believe that ADA, I'm just being hypothetical here. So assuming that ADA is going to do all of this, and it's going to take at least 3 to 4 years before anything concrete really even happens, then in that case, what's your goal, right? Maybe for me, it would be to build my ADA exposure. Maybe by then I want to own, I don't know, a million ADA coins, right? For example. So define your goal, right? And especially define your timeline, because someone who has a 1 year timeline, a 1 year outlook might go like, hey, in 1 year, the bull market's going to end. Sure. But then what's your 5 year timeline, right? What's your 5 year goal? What's your 10 year goal, right? You always, just like trading, how you always start off from the higher time frame and then you go down. It's similar for trading. It's similar for investing, right? Try, right? For most of you, just try to visualize the 10-year plan, right? What do you see this industry 10 years from now? What do you see yourself? What do you see your involvement in this industry? How does it look like 10 years from now, right? After you have your 10-year plan, right? After you have your 10-year outlook, I know it's really hard. I know it's really hard when I'm just saying this, but I'll get into the technicals later. Once you have your 10-year plan, then you can have your 5-year plan. Maybe your 5-year plan will be to ride the majority of this bull market until it ends, and then I'm going to sell off, and then I'm going to buy back hard during the bear market, and I'm going to hold that for 3 years. So now you have just split up. Your plan into the next 5 years, right? You got into the details. And then after you have set your 5-year goal, you move down to, let's say, what's my plan over the next 1 year, right? Or 2 years, right? Maybe 2 years I foresee the bear market happening, and in 2 years' time, the bottom of the bear market's going to be in, and so that blah blah blah, right? You plan out 1 year, so forth. Maybe you can even narrow it down further in 6 months. What I want to achieve, right? I know this doesn't immediately translate into long-term investing, but you should, with anything you do, right? I just believe you need to have a goal, right? If you fail the plan, you're planning to fail, right? And then the second category, right, other than just a 10-year, like just a general long-term outlook, is what I call the 100x, right? I'm sure a lot of you here, I don't know if you've experienced it before, but I'm sure a lot of you here have dreams of catching that big 100x coin, or maybe 200x coin. For example, ADA was a 100x coin for me. Even BNB. BNB is close to being a 100x for me. So I'm sure a lot of you have goals, or at least have dreams of being able to do that. And so this is the second category of long-term investing, which I call the 100x, the 100x people. So these are people who are trying to just catch 100x coins, right? And usually the way they do that, especially right now in a bull market, is they're going to be looking on the fringe markets, right? Stuff like in places like the ADA ecosystem or the Solana ecosystem, or maybe the Polkadot ecosystem that have not had concrete working products yet. It's still just getting fleshed out. And that's where I believe where the majority of the 100x coins are going to come from, right? As long as this bull market continues, then that's where the 100x coins are going to come from. Because you're not going to get 100x from Ethereum, or you're not going to get 100x from Chainlink, at least not in this bull run, right? Where you're going to get that is from the fringe markets, the small cap altcoins, right? The Uniswap gems, the Binance Smart Chain gems, right? That's what I mean by 100x. And even with those coins, you need to have a long-term approach with them, right? Maybe their long-term would not be 5 years. Their long-term could look something more like 12 months. Jesus Christ, guys. I'm going to go downstairs to eat some salt. I'm getting real thirsty here. I'll be right back. Okay, sorry for leaving. But as I was saying from before, right? Even if you are looking for a 100x coin, stuff like small cap altcoins from KuCoin, Uniswap, or whatever, you're going to have a long-term perspective on that, right? You're not going to expect the coin to go 100x in like 2 months. That's generally not how it works. So stuff like Boson, ERSDL, stuff like that, they would fall under the category of 100x for me. And then you have your flips. So this is less long-term, right? This is more of like swing trading. And by flips, I mean, you're just trying to get into a coin, maybe get a 2x, 3, 5x, and then you're going to get out, right? And then you're going to reinvest all those profits into another coin, and you're going to look to do the same. 2x, 3x, 5x. This is not so much long term as it is swing trading, or swing trading. This is more like swing trading. But the way you do this, right, because you're not going to get 2, 3, 4, 5x coins that quickly unless you are dealing with small cap altcoins, stuff like shitcoins, stuff like, I don't know, KuCoin stuff, right? So in general, I would say most long-term investing falls into a long-term outlook and 100x coins, right? The 100x hunters. And with both of these, right, I would say you need at least a 6 to 12 month sort of outlook in order to make that happen. And then, just identify your goal, right? What are you trying to do in the long term? Are you just trying to get more USD? Are you trying to get more Bitcoin? Stuff like that, right? You have to first identify your goal before you can dive into the details. It's similar to how I usually teach TA, right? Start from the higher time frame, and then you can define your entries lower down. So now we can get into the juicy part, right? Probably what all of you are interested in, which is how do you determine coins that are good for the long term, right? How do you look for these coins? So there's a few ways you can do that, but let's actually start off with this thing first, right? I call it this is a thing that I just came up with by myself, but it will help you visualize the process of long-term investing. And I call it the 120-10-5 rule. So I want all of you actually to go onto general chat, right? I will probably, it's okay. Just go to general chat, right? I'll put this, like for those of you watching the replay, you're going to be able to see this. But if you just go to general chat, scroll up a bit and look at Brogan Bids, right? Look at the message that Brogan Bids sent. And he was showing you the top 50 altcoins back in 2014. Yeah. And back then, Litecoin was the top 2 coin. And you have XRP. And then you have a bunch of coins that probably nobody has ever heard of, right? For example, like what the hell is PTS? I don't remember PTS. Stuff like that, right? And can all of you see that thing that, Dean, thank you for sharing that. So this goes to show you that I always say that 95% of altcoins that do well in a bull market are just gonna, maybe not 95%, but like most altcoins are absolutely useless, right? They're gonna disappear in like 2, 3, 5 years time. Those aren't coins that you want in your long-term portfolio, right? If you were building a long-term portfolio, you preferably want to have a portfolio consisted of strong coins and only strong coins that hopefully will make a change in the world. And that is ultimately how you get the biggest gains, right? Look at, for every Microsoft wannabe, like for Microsoft to be at the top of the world, right? There's probably been 999 other computer companies that haven't been as successful. Maybe they just disappeared, right? For every Google that's out there, there's 9,000, maybe 10,000 failed projects, right? So what I mean to say is for every Ethereum out there, for every Polkadot out there, there's been a bunch of projects that have failed or just simply fail to do anything, which is why it's important, which is where this 120-10-5 rule comes in, which is for every 100 projects you are looking at, pick 20, right? Just off the top of your head, pick 20 that seems plausible to you that it's a good altcoin, right? Or maybe it's just a good coin, right? Pick 20. And then among the 20, let's just remove this 10, right? Just 125, right? Out of those 20 altcoins, you're going to actually do the research, right? Go into the white paper, go into the roadmap, get some expert opinions, right? Discuss it with people. And then you're going to do most of your hard work on these 20 coins. And then at the end of that, hopefully you're going to get like 5 coins that you deem worthy of surviving this 5-10 year, journey, right? Because most coins don't, right? I hate to say it, but shit like, I don't know, what's a shit coin that I can think of immediately? I hate to say it, but let's see. Stuff like Engine probably isn't gonna survive, right? Stuff like Gala coins, it probably isn't going to survive 5-10 years down the line, right? Compared to something like maybe Chiliz, right? Chiliz is doing, they are trying to change the world, right? All crypto projects are trying to change the world, but at the end of the day, you have to be able to visualize what it's able to do 5-10 years down the line, right? Yeah, like SafeMoon, right? SafeMoon isn't going to survive 5-10 years down the line. I simply don't see a use case where SafeMoon, where investors are just going to be like, hey, SafeMoon is doing something to change the world. We should invest in that. I don't see a world where that happens, right? Dogecoin is different because Dogecoin is like the meme coin, right? Just like how you guys want to have a meme channel to take the stress off of trading, Dogecoin is the same, right? Dogecoin's been around for a while and it's always survived. Right, it always makes a comeback. So, am I saying Dogecoin is a good long-term investment that you should have in your portfolio? No, absolutely fucking not. Right, that's not what I'm saying here. But I'm just. It's okay. Let's move on. So, it's important to understand that 95% of projects aren't going to survive the test of time. Right? I know it's hard to believe, but seriously, there's like hundreds, if not thousands, of cryptos out there. Most of them are shit. Right? We're just going to put it out there. It doesn't matter what kind of a picture they're trying to paint here, right? There's like out of 100 DeFi projects, 98 of them have some form of yield farming, and they're going to be like, hey, this is the deflationary yield farming, token burner comics. This is going to be the DeFi project that's going to change the world. Or simply put, they aren't, because most DeFi projects are just cookie cutter copies of other DeFi projects. So it becomes really important, right? I'm using DeFi as an example because it's really easy to narrow it down. But most DeFi projects aren't going to survive. And that goes for most other just crypto in general, right? You're not going to have like multiple, let's say, if I'm talking about blockchain gaming, you're not going to have multiple immutable X's, right? You're going to have one Microsoft and the rest are going to be junk, right? So it becomes really important for you to at least try to pick out the Microsofts or the potential Microsofts, right? And the way you do that is through filtering out 95% of the coins that you would want to add to your long-term portfolio, right? Out of 100, maybe I might only add 2 or 3 to my portfolio, right? And I'll get into diversification later, but I'm just trying to paint the picture here. And then the way that, like, once you've picked, 100 coins, let's say once you pick your 20 coins and you want to dive deeper into it, how do you go about doing that? So that's what I'm going to discuss right now. Man, I'm so thirsty. Okay, so firstly, right, there's some things that, you should know as someone who's been in crypto, right? White paper, right? Look into the white paper of those coins. Usually white papers are really fucking bloody ridiculously long. But if any of you know who Warren Buffett is, man literally spends hundreds of hours just going through annual reports and shit. And look at how successful he is, right? There's only a certain amount of results that you can get from doing the boring shit, right? White paper is going to be a really good way for you to just dive into it, right? I don't recommend starting from the white paper because it's really fucking long. So you could start off from its roadmap. Right? What is this coin trying to do? What are its long-term, visions? What plans do they have to make that happen? Right? That start off from the roadmap, right? Figure out what this coin is about. And very importantly, rather than roadmap or whatever, I would say one of the biggest, how do I put it? Determining factors of whether or not a project is going to be successful is firstly, right, roadmap, right? And very importantly, it's the team that is behind it. It would be like, I'm sure you've heard of a lot of business success stories. Let's use Steve Jobs as an example, right? Without Steve Jobs, I would argue that there wouldn't be Apple today, right? Without Bill Gates, there probably wouldn't be Microsoft of today. Without Jeff Bezos's, leadership, there would be no Amazon, right? Or at least the Amazon that we know it. Without Elon Musk, there is not going to be Tesla as you know it, right? Or SpaceX, right? SpaceX is I would argue, it's his biggest success. So, team, right? You want to see who's behind the project, right? If there are a bunch of really smart people, for example, I'll give you the example of Revolution Populi. You have like ex executives of multiple big companies who are behind the project, right? That is I don't know about you, but that is a very competent team, right? You want to look at the team, right? You never want to invest in a project unless you find out about the team first, right? I would say before you place that investment, right? Invest in it. You got to find out the team, right? Who's behind it? Are they talented? What have they done before? What credentials do they have that show that they can make this dream that they have happen? At the end of the day, a project is just a project. Right. A crypto is just a crypto. The ones who are making things happen is really the people behind it. The ones who are allowing that crypto to be successful is the people behind it. So it's really important that you look into the team, right? Very important. But roadmap is just similarly important, right? You want to know what they're trying to do. And most importantly, you also want to see the results that they have managed to get, right? Partnerships, infrastructure, mainnets, just stuff like that, right? It's easy to make a lot of big promises, but when it comes to executing, it's a whole different beast. And then very important, right? Which is its place in the bigger picture, right? I'm sure you've seen this here. So when I say its place in the bigger picture, it means it's really hard for me to boil it down quickly, but you just want to sort of visualize how this project is going to fit into, let's say, try to visualize. Let's say I'm going to use Chainlink as an example, right? Chainlink is the oracle, right? It's going to provide data. It's going to provide the data feed to most projects in order to allow them to function, or rather to allow them to integrate many key aspects of the project. And so, assuming that you were thinking about adding Chainlink to your investment portfolio a couple of years back, how will you, or even now, right? Even now, if you were having Chainlink as a consideration, then you have to think, right? How does Chainlink fit into the bigger picture? And when I say bigger picture, I mean macroeconomically, right? I'm talking about you have to try to visualize what's going to happen. How's the government going to look like? How's the world going to look like? How's countries going to look like? How's everything going to look like? And then try to, don't go off into the rabbit hole there first, right? Maybe try starting off with crypto first. Like visualize how crypto is going to look like 1, 2, 3, 5 years down the line. What do you see crypto becoming, right? How is the industry as a whole going to evolve, right? Visualize, right? Visualize it. And then visualize if Chainlink is still going to hold its place as like the king of oracles, right? As the go-to oracle that people will go for, right? If you can see, once you do this kind of visualization and you're like, hey, I do see a world where Chainlink continues to be the oracle of choice, even 3-5 years down the line, then it's again, long-term investing is simple, but it's not necessarily easy, right? It's placed in a bigger picture, and this is why it's important, and this is why I preach like grand strategy thinking. I don't know if I've told a lot of you here, but I am a big fan of grand strategy, right? Stuff like chess, shogi, even I have a bunch of books by Sun Tzu, by Miyamoto. Like, you get the point, right? And the reason why I'm so fascinated by this kind of thinking and why this kind of thinking fits into crypto, especially long-term investing, is it really teaches you to take into account all the possible scenarios, to consider all angles. Because imagine if you were like, I know it sounds cheesy when I say it like this, but imagine if you were the general of an army and you were planning to attack, I don't know, some country, right? You're not just going to be like, hey, we're going to have 10,000 infantrymen, we're going to have 5,000 cavalry, and then we're just going to attack the wall, we're just going to go there and punch the wall and it's going to fall. I know that's very simplistic, but it's not really that kind of a linear thinking, right? When you are the strategist behind an attack or a campaign, you're thinking of all the things that could go wrong. You're thinking of all the possible scenarios that could go wrong, or all the possible scenarios that the enemy could use to counter your attack, right? Maybe they might set up ambushes, maybe they might attack your supply line, your supply chain, they might call in an airstrike, whatever, right? You get the point. It's important to consider all angles when it comes to long term, and that's why I don't have many coins in my long-term portfolio, right? At least the majority of my long-term portfolio is only consisted of 10 to 20 coins possibly. And I'll get into the importance of diversification later on. But now I'm going to skip like a couple of points down and to this point right here, which says that visualization is a key human element, right? This thing that we have as humans, the ability to visualize, to just look into the future and just imagine how it would look like, it's something only humans can do. And I would argue it's the one thing that has allowed humans to really evolve to where we are at now as rulers of planet Earth, right? So harness that power that you have to visualize, right? Not everyone's going to be good at this, but try to develop it. The better that you get at visualization, like it's key for long-term investing, basically, right? And I know this might sound cheesy, but you should probably do this in your personal life as well. Many people, they go through life like without knowing what's their 5-year goal, what's their 10-year goal, what they're trying to achieve in 20 years, right? You just go through life just living day by day, just getting caught up in, I don't know, office work, homework, whatever, I don't know, right? You're living to day by day without any sense of, long-term vision, right? There's that saying, I've recently been I recently been reading this book called The 7 Habits of Highly Effective People. I know it's a bit late for me to be reading that. I do read a lot, but I don't know why I only just started reading that book. But the author has this saying that most people, right? Imagine if all of you right now suddenly got lost in a jungle. 99% of people are going to immediately start chopping down trees, right? Start hacking away at leaves and everything to try to get out of the jungle. And there's probably only going to be one person that really immediately, right off the bat, he's going to climb to the highest tree in the jungle and he's going to get a bird's eye view of where they are even, or where the exit may be located. And I know it sounds really cheesy for me to be talking about life, but it's a really helpful practice, right? And then that person, right, try to be that person, right? Have that. Yeah, this is really getting cheesy, but yeah, I'm just going to say this anyways. But like in life, right, you're really only going to have, right, if you think about it this way, when it comes to life, you really only have about 5 to 6 major decisions that you can really make, right? You only have 5 to 6 chances of making it big. I'm going to give you an example, right? Let's take Elon Musk as an example. For him, PayPal was a project that took at least a few years to build, or at least get to a point where he could sell it off as a multiple 100 million, company. And that is a decision that he made early on that he was going to commit to, right? Maybe that was his 5-year goal or / 10-year goal, and he committed to doing that, right? But before he even got to getting into the trenches with PayPal, he had a longer term vision, right? He had a vision of how it would look like 5 years down the line, 10 years down the line. And then when he started SpaceX, this wasn't a project that you could accomplish just in 1 year, 2 years, 3 years? No. His vision of SpaceX, I would assume, would probably be 20, 40, 50 years down the line. The further that you can think, right, the more direction your life is going to have, right? Because you only think about it, assuming you live to 70 or 80, right, and you start working from, 20, 25, right, assuming, you're really only going to get 5 chances to make 5 big decisions, 5 good big decisions that's going to really alter your life, right? So I know it sounds really cheesy, but it's just a visualization exercise that you can do before you dive into visualizing whether or not this project is going to survive, 10 years down the line, right? Or 5 years, right? Or even just the bull market, right? Like during the next market cycle. So then the next criteria, I guess, that you could use to determine whether or not a coin is going to be a good fit is, I like to say, use the wisdom of experts, right? There's going to be people out there who have already done the work, who have already filtered out this 125 rule for you, right? These are people who maybe, if you go on Twitter, I'm sure if you go on Twitter, I would say a lot of crypto Twitter people are more like investors. And sometimes if they put out a coin, you could look into that coin, right? Use the wisdom of experts, right? Or even in just this Discord channel, right? In this Discord server, we have a channel called Gem Hunting. And over there, you're going to find a huge list of coins that people have already researched so that you can start somewhere, right? Now, it's really important to never take I don't know if you guys know who this guy called Peter Lynch is, but he has a saying of never take stock tips, right? Which means just because someone tells you that this project is good doesn't mean you just take it. What you do then is you DYOR, right? Go do your own research, right? It's good to start somewhere, right? And then you're going to look into it. You're going to do your research. And then when I say use the wisdom of experts, see whether or not your opinion lines up with some people who you respect, right? Of course, don't base it off of their opinion, right? At the end of the day, you have to develop your own style and your own way of thinking, and that's how you're ultimately going to be successful, right? By yourself. Try not to rely on other people, but it never hurts to use the wisdom of experts, to be like, hey, I might not know better than this guy, so I'm going to see what he has to say and see whether or not I agree with him, right? Just, again, it goes back to that grand strategy way of thinking of just considering multiple angles, right? And then the last tip, to identify, hey, is this coin going to be a good fit for your long-term portfolio, is simply roadmap, right? Again, just discard the fluff, right? Forget all the fucking fancy marketing that they're trying to do, and just look at the facts. What are they trying to achieve? By when? And then just think ahead, right? In your bigger picture imagination, just think ahead. Is this going to be enough to cement this project as something that will stand the test of time, right? I know all of this that I'm saying right now sounds really excessive and it sounds really troublesome, but there's a reason why not many investors come out ahead in this whole market game. There's a reason why 90% of people did not catch on to Google early on. There's a reason why 95% of people, or 99.9% of people, cannot be like Warren Buffett. There's levels to this, right? It may seem excessive, but if you're really, really serious about getting into this investing stuff, it's a really good place to start, right? Just start practicing this. So ultimately, even though I've said all of this, ultimately the only thing you want to, like the biggest takeaway, I guess, is just try to visualize the bigger picture, right? How's the industry gonna look like in 5-10 years? 5 years, right? Let's use 5 years. And just determine whether or not this project, how is it gonna fit in? Is it still gonna survive? If you don't think so, move on. Right? There's a bunch of other coins that you could be looking at, right? So hopefully that should be a very introductory primer into how to identify what coins are fit for a long-term perspective. So just to give you a couple of examples, I would argue that Bitcoin, just because of the fact that it holds its status as, the first cryptocurrency, it's probably not going to die. Is it going to be like a superpower, like 5-10 years down the line? I would argue that until they do something with their, I've actually not transacted. I've actually not sent Bitcoin in a fucking long time. Oh, jeez, never mind. But just, if it's just going to be like a store of value, yeah, it's probably going to survive 5 years down the line because, it's Bitcoin, right? It's the biggest one. And its tokenomics lend very nicely to it being a long-term store of value. So is Bitcoin going to die? No. Is Bitcoin going to continue to dominate 5 years down the line? Maybe not. But it's not going to die, right? All I want to know is whether or not this project's going to die in 5 years' time. I don't think Bitcoin's going to die. So that's why Bitcoin's in my long-term portfolio, right? And I'm going to use Ethereum as another example, right? Ethereum is a project that a majority of dApps are based off of, right? They're built on Ethereum. They use the Ethereum network. And although Ethereum isn't perfect right now, but if you think 5 years down the line, does Ethereum have a good chance of flipping Bitcoin as the cryptocurrency? I would say, yeah, just simply based on use case, right? At the end of the day, the things that will really net you the biggest kind of returns is projects that are trying to change the world, stuff that is trying to radically change the world. There's a reason why most of the new money is made on the internet, right? Back in 2000s, or like 2008, or just the early 2000s, right? There's a reason why most of the money was made in the internet. It's because it was trying to revolutionize the world, right? Same goes for Ethereum, I believe. Ethereum is trying to be like, if Bitcoin is the gold of crypto, then Ethereum is like the one selling the shovels, the pickaxes for you to go mine the gold, right? It's trying to be that thing. And just examples, right? Just try to visualize how Ethereum is going to look like 5 years down the line. Ethereum 2.0 is coming sometime, I believe, next year. And Ethereum, it's already really ugly now, right? Ethereum is not doing well now, right? With the gas fees and the congestion and everything. And yet, it is the number 2 crypto by market cap. And yet, so many dApps are using Ethereum. Although some of them are moving on to, let's say, Polygon. Some of them are moving to other systems like, let's say, BSC. But as a whole, right, Ethereum, even though with its shitty mechanics right now, it is still the number 2 crypto by market cap. What's going to happen a year down the line when ETH 2.0 comes out and gas fees are solved? Just long-term thinking, right? You're not, it might not give you 2x, 3x returns right now, but what about 3 years down the line, right? Stuff to think about. So that's just a couple of quick examples of how I would think long term. And then now that you've identified the coins that you want to hold for long term, how do you approach getting started? There's a few ways that you can do that. And again, before I even get into this, right, you need to formulate your own plan, right? What is your plan? Are you trying to do a 10-year investment? Are you trying to do a 5-year investment? Are you trying to just do a 1-year investment? Maybe you're just trying to catch the bull run, right? Figure out your plan. I can't be the one to tell you what your goal should be. For me, my goal is to really capitalize, to really build my crypto exposure before it takes off, because I believe that crypto is going to be a integral part of life, probably 5 years down the line. So in this case, I'm not looking so much as to build my USD portfolio, right? My USD exposure. I want crypto exposure. So during this time, I'm trying to accumulate as much of the cryptocurrencies that I believe have a shot at changing the world. I want to accumulate those as much as possible. Right? Similar to how when you're buying NFTs, you're not really looking at USD value. I mean, some people do, but I'm looking at ETH, right? I bought this for 15 ETH. I flipped that for 28 ETH. I'm trying to build my ETH exposure. That's why you have a plan, right? And have a time frame, right? Until you have your plan, none of the shit that I'm about to cover is gonna mean anything. right? You're just going to fail at long-term investing if you do not have a plan. So the first method of getting started long-term investing is just consistently put money into the markets, maybe every month, right? You formulate this own plan, but as for entries, maybe every month you will dedicate yourself to putting $5,000 into your portfolio. And maybe your portfolio could be 10% ETH, 15% Bitcoin, 10% Polkadot, 5% Polkadot, whatever, right? You build that. That's the details, right? I'm just giving you, a way to get started, right? The first one is the consistent time-based approach. Right? Just consistently put money into your portfolio every month, no matter if the market is up, no matter if the market is down. If the market is down, you can add more, but it doesn't matter if market is up, market is down. You just put money in. Right? Don't try to time the tops, don't try to time the bottoms, right? That is not what long-term investing is about. You're not trying to catch the bottoms here. What you're trying to doing is have your long-term plan in mind and then work towards that. If my long-term plan is to, let's say, get to a point where I have 10,000 ETH, right? For example, or 100,000 ETH, then it doesn't matter what I do in the short term, as long as I continue to put money into ETH, then I'm going to be building, I'm going to be getting closer to my goal, right? So it all comes down to what your plan is, right? So this is the simplest, most stress-free way that you can do this, right? And this is how most people invest in the stock market, right? You just consistently put money into, let's say, the S&P 500, whatever index that you're looking at. Just continue putting money into that. And at some point, you're going to have a very sizable portfolio, right? So you can do this for crypto as well. Stress-free, you don't have to do any work, you just put in money, right? The second one is what I like to call the order block and swing entry point approach. So based off of what you've learned on order blocks, right? Just as every time, right, the price pulls back into an order block, you just add more, right? Just have a plan. Every time price pulls back into an order block, into a bullish order block, it doesn't matter if it's on the daily, on the weekly, on the 4-hourly, whatever. Every time the price gets there, I'm going to put in $500. Every time the price gets to an order block, it doesn't matter if this will be the top or if this will be the bottom, I'm going to add in $500, right? When it comes to long term, you just want to have a plan, right? You want to be really disciplined about it. And I need to stress this. I cannot stress this enough. But when it comes to long-term investing, you never want to try to catch the tops or try to catch the bottoms. That is not what this is about. Long term, you have your plan. You work towards that plan. You have your set take profit plan, you have your set entry plan, and you're just going to consistently do that over time. It's not about catching the bottoms, or it's not about catching the tops, right? As long as these criteria, right, based on your plan, if these criteria happen, you're just going to buy. You're just going to add. If these criteria happen, you're just going to take profit, right? You're just going to take profit, right? So order blocks. It doesn't matter if the order block is higher than your entry. You are trying to build your portfolio. You're trying to build your exposure over the course of years, right? It doesn't matter that you're not catching the exact bottom by 20-30%. It doesn't matter if the entry price is 30% higher than your entry, right? As long as you continue to add to it, then you're getting closer to your long-term plan, right? The third one is, it's pretty self-explanatory, right? The buy the dips approach, right? Every time, maybe you have a plan, every time price falls by 10%, I'm going to put in $500. Every time if the price falls by 20%, I'm going to put in $5,000. If the price falls by 50%, I'm going to sell my house and put it into. No, I'm just joking, but you get the point, right? Have your plan, right? Have a predetermined set of conditions. 10% means 500. If it drops by another 10%, I'm going to put 100, another 500. If it drops by another 10%, I'm going to put in 2,000, right? Just have a plan, right? Have a predetermined set of conditions that you're going to use to add to it, right? And again, this only applies once you have a plan, right? Once you have your plan, if you were a 100x chaser, if you're a 100x hunter, you're not going to be doing this, right? You're not going to be doing this buy the dips approach. You're going to go in heavy at where you think the bottom is, right? Or maybe over the course of 3 months near the bottom. If I'm just going to use an example, right? I believe ESRDL. Why can't I find it? RVP, right? Let's use RVP as an example. Revolution Populi, right? For the last, if you guys, when you have time, right, just go onto your own chart. For those of you watching the replay, you're going to be able to see this. But over the last 3 months, Revolution Populi has just been in accumulation, basically. So if you're a 100x hunter, then you're going to try to build your positions heavily during the accumulation phase, right? And that's what you do and that's your plan, right? Of course, you can narrow it down further to have a concrete set of conditions for your entry and for you to take profit. You can figure that out by yourself, right? Most investing approaches work. It just comes down to whether or not you have the discipline to stick with it over an extended period of time, right? A lot of investing approaches work. It can seem very simplistic, but given enough time and given enough discipline, they will pay off very lucratively. And then the fourth method is, it ties back actually to the order block swing entry point approach, which is just, I don't really have a name for this. I'm just going to call it the add and add approach. Basically, actually, this is actually redundant, right? Let's just remove this. It's just basically adding when price pulls back into areas of value, right? It doesn't matter if you bought ADA at 1 cent. If ADA, I'm going to use ADA as an example, right? It doesn't matter if you bought ADA at 1 cent. So let me go into ADA. You guys are not going to be able to see this, but when you're watching the replay, you'll be able to see this. So for example, it doesn't matter if you bought ADA at 1 cent, right? Okay, it doesn't actually get to 1 cent. So 2 cents, right? 2 cents 50, right? When you see ADA go on all the way up to 5 cents, maybe even here, and it pulls back into an order block, right? Assuming there's an order block there, then you're just going to add during pullbacks because you believe in the 5-year vision of ADA. So during pullbacks, you can add knowing that's probably going to continue to go up. Of course, this is, that's long-term perspective. That's long-term investing in a nutshell, right? Just adding during pullbacks, even though it will bring your entry up, knowing that it's going to do well in the long term, right? Which is why it's really important to have a plan, right? And to stick to it. So I just want to add that none of this is going to be easy to do, right? But the rules are very simple. You have a plan, you have a long-term vision, and you stick to the plan. It's that simple, right? It's simple, but it's not easy, right? Because there are times when the market's going to pull back, you're going to get into a bear market, and you're going to question your decisions to even be doing this long-term thing. So just understand that this is not going to be easy, right? But you can develop this mindset, right? It's not going to be easy in the beginning because your portfolio might be in the red, but your portfolio might be in the red for 1 year. But then you have to think about, which is again the importance of having a plan, right? If you're thinking 5 years down the line, it's just like regular stock investing, right? Just regular investing in general. Let's say you have a 30-year plan, right? For every month, you're going to invest $1,000 of your paycheck into it. Regardless of whether the market is going to be up or down, you're just going to do it. And it doesn't matter during that 30 years that the market is going to be crashing for like 2 years. You shouldn't be worried because you have a long-term plan. You have that 30-year plan. So this is just a little bump in the road during that, that journey, basically. So just remember that the way that you are going to be able to stick to this is actually to have a very, very clear plan, a very clear vision of what you're trying to achieve. Without that, you're not going to have the conviction to stay. Just like how if you, I'm actually not going to try to give any more examples, but you should get the point. So the pitfall, I'm just going to get some of the pitfalls, right, that you are going to run into doing this long-term thing is you're going to feel impatience, right? You're going to want to take profit when it's up by 100%. But then again, there's a lot of these short-term kind of thinking that you're going to fall prey to, right? Because we're human. We are wired to want that piece of chocolate now. We're wired to want, the candy now, right? So there's a lot of things as you go along your long-term journey, there's going to be a lot of these little bumps in the road, right? They're not going to be so little in the moment, in the now, but you have to be able to identify these things that are telling you, hey, the market is near its top, so you should take profit. Again, it goes back to what I was saying before, right? Never try to time the markets, right? You're not trying to catch the tops. You're not trying to catch the bottoms. You're going to have your 5-year plan, and you're just going to work towards there until the conditions for you to cash out of your 5-year plan is there. You're just gonna stick to the plan, right? So just be aware of that, right? It's gonna be a lot of times where your primal brain is gonna tell you, hey, the market's gonna die now, so take profit, right? And you can listen to it as long as there are a few conditions. Like for example, when you are making your plan, you should have a determined exit condition, right? An exit strategy. If a few of those conditions are met when your primal brain is telling you to get out of the market, then yeah, sure, go ahead, right? At least you're not just basing the decision purely off of emotions, which is the downfall for most people. Not just trading, right? I'm sure all of you can attest to that, right? Emotions are like the biggest enemy for trading in general. So now, finally, we're getting to the last part of this. Wow, the stream has actually been going on for almost 1.5 hours. Shit, I'm so sorry, guys, if I've been very long-winded. I'm really sorry. But yeah, let's try to speed through this. So here's just a few golden rules of long-term investing from my own experience, and hopefully these are tips that will help you guys along your journey. So the plan, right? Again, I've said this probably 20 times in this stream, but have a plan, right? Really visualize first, right? Don't be that guy just going through your life, not knowing what you want to do with your life. Right, just going through college because your mom tells you to, go get a job because your wife tells you to. I'm just trying to give an example here, right? Just have a plan, right? Just know what you want. Know how long it's going to take, stick to the plan, right? And this one's where, and now we start getting into the juicy stuff, right? Contrarian thinking. When it comes to being a successful investor, right? Or even just a trader. Now, actually, this applies more to investing. You want to try to have contrarian thinking, right? I know in the beginning, I mentioned that you should use the wisdom of experts, right? You can have their opinion, right? You can consider their opinion. You can consider their take on things, but you should never base your decisions purely off of that, right? And that's where contrarian thinking comes into play. There's not going to be a lot of people who will agree with your thoughts when you are doing your own analysis or when you're doing your long-term analysis. Not a lot of people are going to share your thoughts. And that's exactly what you want, actually. You don't want to get into a coin just because the herd, right? Everyone is telling you that it's good. That's one of the easiest ways that you're gonna fall, right? And let's use, again, I don't want to seem like I'm cherry picking examples here, but let's use Warren Buffett as an example. Even during the entire internet boom and the tech boom, I believe the only tech company he invested in was, I do not quote me on this, but I believe there was only one or two tech companies that he really invested in, right? And this was throughout the tech boom, right, of the early 2000s. And while this might not seem like contrarian thinking, imagine how much pressure he would have been feeling at the time from his shareholders and from everyone around him, right? I'm sure he knows many hedge fund managers, many fund managers. Imagine the kind of pressure that he was going through at the time. Everyone's saying, hey, I'm making like 100x on Google. Why aren't you getting in, right? And yet he was able to stick to his plan. Again, stick to your plan and to adopt contrarian thinking. So don't base your investments off of what the herd thinks, right? I don't care if 99% of you don't agree that, let's say, I don't care if 99% of you think that Federal Reserve is not going to be a good project. I've looked into it. I've visualized what's going to happen in the future. I do see a place for ERSCL in that future, and I'm going to stick to my bias. Right? I'm going to be confident in what I know. And I guess even the best example, in fact, let me add one more point to contrarian thinking, and that is stay within your zone of expertise. And I believe this is something that the best investors preach all the time, which is, I know not everyone here is going to be an expert in, data science and be able to tell that, hey, Chainlink is gonna be amazing. Just there's simply not a lot of people who are computer scientists that understand the intricacies of a lot of these crypto projects. So it is good to consider. Like, you should put in effort to try to understand these things, but at the end of the day, the best investments, the best long-term investments that's going to come in your life is when you are investing within your zone of expertise. Basically, investing in what you understand. I'm going to give you an example, again, from personally. I really know my blockchain gaming. I have been an avid gamer since I was a kid. I understand where blockchain gaming is going to go. I understand that it's going to become mainstream, and I understand exactly why, because I have always been a gamer. I don't think that blockchain gaming is going to take off right now because it's still not fleshed out yet. We don't have a proper AAA experience or even just a proper MMORPG sort of. I don't know if you guys remember the good old days of World of Warcraft and Dota and like Counter-Strike 1.6 and the good old days basically. But I don't believe we have one of those the tipping point, right? One of those tipping point games that will really like tip the blockchain gaming industry over the edge. Not yet. But because I understand gaming, I have been a gamer, right? And I'm proud to admit it, that I am invested in games. I'm proud to admit that I just spent $50,000 investing in NFTs from a game that hasn't been released yet. And to most of you, that would seem really unreasonable, right? To most of you, that would not make sense. Why are you buying game items? Why would you spend $50,000 buying in-game items? But again, it doesn't matter what you guys think. What matters is I know that I know that this is my zone of expertise. I know what I know, right? Basically. And it's really important that you identify your zone of expertise. If identify like, hey, do you understand this? If you understand this and you see this fitting into the future vision that you are imagining, then go with it. Like, one of the biggest tips I can give you, like, period. Stay within your zone of expertise, right? Doesn't matter what other people tell you. You know what you know. Just like how, I wonder if Pixel is in here. Is Pixel in here? No, okay. Well, just like how I have friends who invest in, Sparky, right? Sparky. For example, Sparky is a very big investor in watches, right? Rolex, Patek Philippe. He loves his Casios, if I'm not mistaken. I know nothing about watches. I was just having a conversation with Sparky the other day, and I didn't even know half the things that he was saying. Like, I just don't. I understand that watches, like these luxury watches, these vintage watches, they have value, but it's not something I understand yet, right? I will make an effort into trying to understand them, but at the end of the day, I understand fully that that is not my zone of expertise. Just like how 99% of you here probably don't know the next thing. Most of you here probably don't know jack shit about tea outside of, let's say, green tea and black tea, right? I'm pretty sure most of you here don't drink tea, but I've been drinking tea. I'm a collector of tea, and I invest in teas because that is something I understand. I am a huge tea fan, right? And I have my own tea storage, cellar, and that is something I understand in. And I understand most of you do not, but I'm confident in what I know. And so I invest in teas, right? Most people are not going to agree that that's a good investment, So zone of expertise, right? The more you can stay in your zone of expertise, the better. It's good to take opinions. It's good to consider opinions, but at the end of the day, you have to be confident with your own bias, and you have to be confident with what you think, right? Before you get a good understanding of various topics, it's really important that you spend time learning about it. But once you feel like you have a solid enough understanding, I don't need to be like a data scientist to know that Chainlink is a good project. You just need to get a good enough understanding of what you're looking at. Then you can start to form your own opinions, right? So contrarian thinking and stay within your zone of expertise. One of the biggest pieces of advice that I can give you guys. And secondly is diversification. So finally, we get into a juicy topic again, right? Diversification. How many coins should you have within your own portfolio? So this, for different people, this could be very, very different. So for example, right, I'm just going to use Into the Cryptoverse, isn't it? Actually, let's not talk about him. There's this saying in stock trading, or rather stock investing, or just dividend investing, that you never want to have just, let's say, 5 stocks in your portfolio, right? You never want to invest in single stocks. You want to ideally be investing in an index, right? A collection of stocks, because then you would be owning hundreds of stocks. And if, let's say, one of them just goes to zero all of a sudden, like bloop, then your portfolio is not going to take that big of a hit. Now, that is the importance of diversification, right? Just making it so that if Ethereum were to suddenly get hacked and 200 billion worth of Ethereum suddenly gets stolen, it's not going to have that adverse of an effect on my portfolio. Although it likely will, because a lot of altcoins are pegged to Ethereum. But let's not get into that. So diversification, right? The general consensus is you want to be diversified enough that not any single failure is going to wreck your portfolio, right? And there is merit to that. But then there is also the other side of the coin where you can be too over diversified, right? You could have 200 different coins in your portfolio, at which point I'm going to ask you, out of those 200, do you really, really believe that all 200 is gonna be able to help you get to your goal, right? And that's something you have to think about as well. So I would say diversify, right? In the sense that you should have coins in DeFi. You should own coins who are trying to change the world, stuff like Cardano. You should own ecosystem coins like Solana, like AVAX. You should definitely own Bitcoin and Ethereum, because why not, right? Those two should automatically be in most people's investment portfolios, simply because they have the most track record, right? They are proven, mainstays. Actually, for all that I know, Ethereum might just die after this year. Who knows, right? You never know. So have your own plan, right? But be diversified enough. Maybe have a general recommendation would be have at least 15 to 20 coins at the minimum. Maybe 10 coins at the minimum. I don't even recommend 10. Maybe have 15 to 20. And then at most, I'd say 50 is probably the high end. If you do get to 50, you really have to start rethinking a lot of them. Do they really deserve a place in your long-term portfolio, right? And there's the other challenge when it comes to having so many coins in your portfolio is how you gonna delegate percentages to those coins, right? For example, if you use the consistently, right, just every month I'm gonna put in a certain amount of X number of dollars into crypto, how are you gonna delegate, right? How many dollars to which coin, right? You get the point? There's only a few coins that you really want to be accumulating, and the rest should just be holds, right? So that's the challenge of having way too many coins in your portfolio. So again, of course, any of the stock market experts in this group will probably do a better job than me than explaining to you how to manage many positions in your portfolio. I'm sure they would be much better experts than that. And what works for me might not work for you, right? I have maximum 50 coins in my portfolio. In fact, I don't even have 50. Probably have like somewhere in the region of like 30 plus, right? And that works for me, right? Experienced stock market people are going to be saying like, hey, 30 is way too little. If one coin absolutely goes to zero, then your portfolio is going to take a hit. But at the end of the day, I'm okay with that, right? I have my long-term vision. My goal could be different from somebody else's. And at the end of the day, I'm okay with that, right? So importance of having a plan and to stick to your plan, to stick to your beliefs, right? So diversification, right? Be diversified enough, but not too much. And then next up is never be married to your ideas, right? Be ready to pivot, rebalance often. So this point right here actually So this point right here actually ties into this point right here, right? Ride the winners and cut the losers. So what I mean by this is, let's say 1 year down the line, maybe right now you think Cardano is like the next big thing, right? Cardano is going to absolutely dominate the market, right? It's going to be so world changing. It's going to do so much good that it's going to be huge. But then let's say maybe in a year, Charles Hoskinson goes into court. Maybe he's accused of sexual harassment or something, and he's suddenly banned from Cardano, right? When that happens, you need to be ready to pivot, right? Never be married to your ideas. Right? Even though you think Cardano is going to be the greatest thing in the world, I would argue that Charles Hoskinson is a really big part of that. And if something were to happen to him, you have to be ready. Never be biased, right? You have to be ready to rethink. Hey, is Cardano still going to be able to get there without Hoskinson? So then that's a time when you have to consider, hey, maybe it's time for me to allocate a lower percentage of my portfolio to ADA and to rebalance the portfolio, right? Maybe instead of 5% ADA, I'm just going to have 2%, right? Something like that. Never be married to your ideas, right? Always be ready to change. And maybe, again, I'm just going to skip a couple of points here, right? The winners, cut the losers. Maybe you thought that, AXS is going to go to the fucking moon, right? AXS is going to be a mainstay in the world of crypto, in the world of blockchain gaming. And then all of a sudden, you realize that, hey, it's been like, what? A year since they have released their product and it still hasn't taken off yet. Should I cut the loser, right? Because AXS is not doing well. I mean, clearly it's doing well, but let's assume, right? Then that's the importance of cutting the losers and riding the winners. So riding the winners, right, actually ties into this other point called stay the course, right? Ride the winners ties into this. So I'm sure you guys have heard me say a lot that you should ride your winners as long as possible and should cut your losers as quickly as possible, right? If a trade appears to be lagging behind, or it's just not moving, it's just fucking around, it's just showing weakness, then cut it, right? Just cut it, right? Cut it for 1-2%, whatever. But if you do get a winner, that's like, to use a recent example, who's a big winner, right? ADA, right? Let's say I got into ADA at $1.40, right? And I see it's fucking flying now, almost back to its old all-time high. I'm going to let it ride, right? I'm not going to be taking profit that quick. Just ride the winners, right? Maybe I might ride it until it reaches $5, right? I'll continue monitoring it. And this is actually going to tie in to stay the course, right? When I say stay the course, what I mean by that is stick to your plan, right? If my plan was to hold ADA until it was $5, I'm not going to be panicking when ADA, let's take a look at ADA right now. I'm not going to be panicking if ADA pulls back to $1.90, right? If it does pull back to $1.90, that's going to be a 10% drop. I'm not going to be panicking, right? Especially if my entry was like $1.40. I'm just going to set a stop loss below $1.67, like maybe around there. And I'm just going to let ADA do its thing because that was my plan already, right? So have your plan and stay the course, right? It ties into, there's going to be a lot of moments where you're going to be tempted to panic sell. You're going to be tempted to try to time the markets. So you need to have that plan, right? Your plan is going to give you the conviction to stay the course, okay? And then the next part is going to be risk tolerance, right? What is your risk tolerance? Are you comfortable seeing your portfolio go into the red for like minus 90%, right? let's use that example. This doesn't really apply to crypto as much because crypto tends to move as a pack, right? It tends to move together. So it doesn't matter if you are allocating a lot into Bitcoin and a lot into, basically there's a certain element of moving together. So risk tolerance, this doesn't really apply as much to crypto, but if you do want to get a better idea of how to calculate, your Sharpe ratio, just the risk that you are taking on in your portfolio, you're going to actually want to check out, in this case, I would actually recommend this person called Into the Cryptoverse, right? On YouTube, I think his name is Benjamin Cohen. So this guy is a mathematician. He, again, this is a time when use the wisdom of experts would apply here. I know that I'm not really good at this kind of math, right? At calculating risk. So in this case, I will learn from somebody who I believe I respect to know better than me about this, right? I'm not ashamed to admit that, right? Benjamin Cohen, he's the guy to look for calculating portfolio risk, right? How much risk are you taking on and versus how much reward, and how to calculate the sweet spot between that, right? Understand your risk tolerance, right? If you are less risk tolerant, then you're not going to want to have that big of your portfolio in trying to catch the 100x altcoins, right? You're going to have a bigger part of your portfolio in established coins, stuff like Ethereum, stuff like Bitcoin, maybe stuff like ADA, like, I don't know, Polkadot or Chainlink. You're going to have a bigger part of your portfolio in those rather than have a very big portfolio in shitcoins, right? Stuff that has maybe less than 500 million market cap, right? Depends on your risk tolerance. And then research, right? This is key. This right here, key. Fucking key. Again, the reason why there's not many Warren Buffetts in the world is because he goes through a very, very, very stringent process of picking something to add to his portfolio, right? You don't see Warren Buffett after hearing, let's say, Bill Gates talk about how Tesla's going to be the next big thing. You don't see Warren Buffett just taking his advice and adding it to his portfolio. You simply don't see it. But what Buffett does better than anyone else, I believe, is he really puts a hard filter on the coins that he's willing to add to his portfolio, right? He's not just going to add something into his portfolio without first doing 200 hours of research on it, reading through fucking 10 annual reports and, stuff like that. And maybe he does visualizing as well, right? Who knows? So seriously, this long-term thing, right? It can be a lot of work. There are people, right? Hedge fund managers especially, right? Hedge funds, those big funds, right? That's literally all they do all day, right? Rather than saying like, trading, right? Trading is mostly done by algos, right? I'm not talking about the people who are trying to manipulate markets here, but investment banks, especially hedge funds or whatever, they get quant developers to develop algorithms to do their trading for them, right? What hedge fund managers are more focused on doing is adjusting their portfolios, right? It's just determining every day, literally every single day, they're just determining, hey, should I be reallocating percentages of my portfolio to this? How do I rebalance things? Is there anything that I should be adding? Reading a lot of news, reading through a lot of reports, just figuring out people should be adding, if they should be adding this to their portfolio, or if they should be removing, right? Stuff like that, right? There's a lot of work that goes into this, right? Again, I say it's simple, but it's not easy, right? Seriously, the more that you can filter out the coins that you want to include in your portfolio, the better, honestly. Because simply put, most coins aren't going to survive. It's just the way the world works, right? Natural selection. Right, applies to crypto as well. And then never try to time the market, right? There's this interesting statistic. That's this interesting statistic that says, let me try to give me a moment. I don't remember. But that statistic went something like most people, because they're trying to time the market tops and everything, because they're trying to time it, of course this applies to stocks more than crypto, because crypto you don't have an index fund crypto yet. I mean, I'm not talking about stuff like DeFi perp and NFT perp. I'm not talking about it, or even shitcoin index. But the people who were trying to time the markets, right, they actually got like 9.4% annual return trading the S&P, investing in the S&P 500, whereas people who just bought and hold over a course of time actually got about 12 or 14% annual return. It's just something like that, right? Don't try to time the markets, right? If you see the market, right, that I've taught you the signs that you should look out for to understand when reversal is going to happen. If you see something like that happening, then yeah, sure, sell your bags, right? But otherwise, don't try to time the market, right? Just let it do its thing. And again, I know I've said this many times, but have a plan, stick to it. That's easily the one thing that's going to help you to not try to fall into the impulse of trying to time the markets. It's okay to take profit, by the way. Good to take profit, but it's not good to try to time the market and hey, this is the top, I'm going to sell everything here, right? We'll get into that. Sometime later, right? In a separate video. But for now, for most people, long-term investing, don't try to time the market. And then, we're finally near the end and we can start taking questions. But focus on the future and keep a long-term perspective, right? I need you to understand that if you are doing this for over a long period of time, 99% of the shit that happens in the next 6 months isn't going to matter in your 3-year plan, right? That's why you have to be ready to have the conviction to ride through the downturns of the market and have conviction in your plan, right? Have conviction in your vision, believe that it will happen. What you'll find is crypto especially, strong hands are rewarded very hard, while weak hands are punished a lot, right? Very hard. And while crypto doesn't have like an index, like a proper index that you can invest in yet, it still applies, right? Just keep a long-term perspective and stick to your plan, right? Take profit, reinvest. Basically just means to have a take profit plan, right? Have an exit strategy. I'm not going to get into exit strategies here, but in general, there's a few ways that you could use for exit strategies. Maybe you can take profit, like maybe for every I don't know, just have a plan, right? For every 50%, or maybe for every 100% the price goes up, you're going to take 25% of profit, right? From your entry point, right? For example, or maybe once the price reaches a 5x from your initial, you're going to take half out, right? No matter what, right? Just have an exit strategy. You're not going to be catching the tops, right? You don't need to be catching the tops to make an absurd amount of money in crypto, or especially in crypto, right? There's so much money to be made. You don't need to catch. You just have a plan and stick to it, right? That plan could look different for many people, right? And then lastly, 80-20, 85-18, right? Make sure you allocate a good percentage of your portfolio onto your long-term holdings, right? And then in the meantime, you should still learn trading as well, because you can make a lot of money trading. And the goal of trading, right, or at least doing short-term trading, is to build your USDT exposure, or it's just to build free capital, right? To build your capital so that you are able to add more to your spot holdings over time. And that's what I do my trading for, right? I trade, I make money, and I invest a good portion of that into my long-term holdings, and I just move it into cold storage, right? Ultimately, that's the goal of trading. But hey, again, the beauty of being in the markets is that there are 999 ways to make money that works, right? So pick one that works for you, right? Develop your own style. What works for me might not work for you. So figure out what kind of a person you are, what goal you want to achieve, and stick to your plan, right? Develop your own style. It's the beauty of the market. So yeah, that was a fucking 2-hour stream. My goodness. I'm so sorry if I was super long-winded. I'm really sorry. But yeah, thanks for all of you who stuck through with me. I'm very happy to see so many of you still here. Honestly, I am. Has this stream been helpful, guys? Also, now we can start to take questions. So if you have any questions, go for it. Okay, so Madden asks, how do you identify flips? 2 to 5x between flips and long-term holds, basically. Long-term hold as in 100x. So like AXS, it already did a 13x. How do you determine if it still goes to 100x or if it's maxed out already, right? So for AXS, right, in this case, you could look at the white paper, but a better way of understanding this is first off your plan. What kind of a time frame are you looking at? By the way, to all of you who asks me questions right now, give me a time frame. What time frame are you looking at? Someone who has a 6-month time frame is gonna look wildly different from someone who has a 5-year time frame when they are thinking about this. Especially you, Madden, right? Tell me your time frame, right? For example, if you were thinking in a 6-month time frame, then AXS should be nearing in a 6-month time frame, right? At least you're gonna want to hold AXS until the land sales come out, right? The land gameplay. 5-year plus. So 5-year plus, you're gonna have to think about it, right? Is AXS as a game going to be able to survive if, let's say I do visualize this happening in 2 to 3 years time, some big gaming company is going to join the blockchain gaming scene. And by big game company, I mean stuff like Blizzard, like Riot, like Valve, like Steam, right? They're going to get involved in the crypto scene, right? In the blockchain gaming scene, right? In 2 to 3 years. If they are involved, they are going to make a game that is good, right? That is worthy of a AAA, that's worthy of a Hearthstone-like level. And if that happens, do you think AXS, a fully fledged out AXS, right? A fully fledged out Axie Infinity, will that survive the test of time? Will that be able to compete with the big game companies, right? With the mainstream game companies? So you have to identify that first before you think about time frame, because at least me, right, again, don't take my opinion for it, right? It's good to consider my opinion, but don't take it word for word. In my humble opinion, I don't think AXS is going to be even fully fledged out, right? Unless their earning potential is really high as it is right now, I do not think that it will be able to compete 5 years down the line. I do think that it will stay relevant for the next 2 to 3 years, but I do not think that it will remain relevant 5 years down the line. So in this case, I would actually adjust my AXS investment plan to more of a shorter than 5 years for me personally. That's just what I think. I hope that helps you to visualize what I think, like how I think about it. This is the importance of thinking about the bigger picture, right? Consider the other perspectives, right? Because AXS is not, I would argue that it's not compelling enough that I better not spend so much time on like one question. So DLP asks, do you think with blockchain or the actually I'll move my Discord over. So do you think blockchain or the crypto is still very new in general? Will it hinder people from getting into NFT gaming? I don't really understand that question. Do you mind rephrasing that? Is Guild of Guardians a good investment now, years to come time frame? Now, Guild of Guardians, I actually cannot say until the game is released, but based off of what I can understand and what I've seen so far, for me, GOG would be more of like a 1 year, 2 year investment at the moment. I do not consider GOG a 5-year investment yet because I haven't seen enough. Yeah, what Sparky is saying, right? Recommend getting comfortable with learning. Visualization can only be done with your understanding of how the world works. Learning macroeconomics, keeping up to speed with politics, state of the economy, inflation, deflation, unemployment. All of these things should be like layers to an onion of how you flush out your visualization of how the stock/token will be viable in your time frame. Yes, Sparky, that is words of wisdom right there. Like that's I'm gonna try to pin that somewhere. Yeah, that is so true, right? What I'm doing right now comes easy to me because I'm a natural learner. I'm naturally very curious about the world. I'm spending all of my time just watching macroeconomic stuff, just reading books, just reading, learning. I might not be good with, as my girlfriend likes to say, I'm not very good when it comes to my EQ, right? Like people-to-people knowledge. But the moment you ask me about history, right? Roman history, Japanese history, I'm well read I try to educate myself as much as possible, not just in trading, right? Just about the world in general, so that you can see, right? History shouldn't be used as an indicator, but history will teach you a lot about the things that shouldn't be repeated, right? You can see stuff that repeated in history, right? If you don't study history, I forgot what's that quote about history being the teacher of some, like history doesn't repeat, but it often rhymes. Yeah. Thanks for that, Sparky. Yeah, that's the one. So I have the luxury of doing this full time. So in my spare time, that's all I do, right? I spend time learning, spend time exploring new industries. For example, if I didn't take the step into exploring blockchain gaming, I would not know about it, right? You don't just you don't just know about something without trying it, right? Go explore, right? Explore around. So Dan. So Dan asks, if I had 10k today and if I had a 6-month time frame, what 10 coins and what ratio and what entry prices would I go with? Excluding Bitcoin, ETH, and Link. So it would be hard for me to answer that question, but if I had 10k with a 6-month time frame, I would definitely look at a coin like 6-month time frame, right? ADA's definitely going to be up there. Yeah, that is financial advice. I'll actually do a more detailed write-up on that like after this stream. I would like to get more questions. Try to ask me questions about the concepts that I just covered rather than asking me to give you guys specific entries. We can get into that anytime, right? But the concepts we can only discuss right now. Can I share my top 10 coins to hold in the next 5 years? Bitcoin's definitely going to be there. Ethereum, right? Chainlink, that is a mainstay. Polkadot, right? I do believe Polkadot over a 3 to 4 year time span, maybe 5. Polkadot is going to be absolutely fucking huge. What others can I think of off the top of my head? I'm not actually that confident in BNB, right? But we'll see how that plays out because Binance is getting a lot of fucking flack Binance is getting a lot of flack. I don't know if it's going to survive 5 years, but at least in the next 1 to 2 years, it should be pretty good. You have Solana, right? Solana too. Right off the top of I'm just thinking off the top of my head right now. Solana could be really huge because, again, these coins that are trying to change the way things work, huge, right? Yeah, I mentioned ADA already. Solana, right? Solana is something that I'm looking to add, but currently it's just a very small percentage of my portfolio. something I'm looking at, something I will look into. Right. Let's see. Over the next 10 years, what other coins are there? Shit. I don't even remember. RVP. I do think RVP is going to be a coin that you guys want to get in early right now before it takes off. RVP, I'm investing with at least a 5-year time span, at least. And then there's going to be, how many have I covered? 6? Yeah, about 6. Wait, no. Bitcoin, ETH, Solana, ADA, DOT, Link, RVP, so that's 7. Off the top of my head, which ones do I think have the best chance of making it? Oh man, I'm actually gonna have to do a write-up. Off the top of my head, just gonna go on CoinGecko, see what I'm missing here. I do think Matic has a strong case going for it, but once ETH 2.0 comes out, I don't really see the viability of Matic anymore. Terra could be good. Oh, what the hell? There's an F. Boson. Oh, right. Boson. So Boson is a coin I'm investing with more of a 3-year time span, right? 3-year outlook. I don't think that's going to be the 5-year one. Atom. Okay. Atom is an interesting one because it depends on how they do it, right? How they execute. Atom has a really good idea going on right now. Atom has a really good chance of being able to survive 5 years, but it really depends on how they execute their ideas, right? They have a really good idea, right? Atom, you can consider that. Cosmos Atom. RSR is one that has really good potential as well. AVAX. Now AVAX is an interesting one. I do think 3 to 4 years, right? A 3 to 4 year time span. AVAX is really good, but I'm not sure about it surviving 5+ years down the line. Elrond Eagle is really interesting as well, right? Elrond Eagle. Yearn Finance. Yearn Finance is, man, I if you guys want like a definite top 10, I'm gonna have to write that out, right? Right now I'm just going off the top of my head right now. I will write that later on. So this goes back to what I said earlier about I don't have that many coins in my long-term portfolio, and most importantly, there are only a few coins that I'm actively accumulating. The rest are just there, they're just there as a 100x flip. But there's only a few coins that I'm really accumulating over a 5+ year time frame, right? And immediately I can tell you that Bitcoin, I'm accumulating Bitcoin, that's for sure. Ethereum, right? I'm accumulating a lot of Ethereum. I'm accumulating Polkadot. I'm accumulating Chainlink. Less so Chainlink, right? Less so Chainlink, but enough, like still a good amount, right? So BTC, ETH, DOT, Chainlink, ADA. I have recently started accumulating, and I will continue to do so over the next years. Right, so that's 5. And then there was one that I was missing out. What was it? Solana I'm looking to start accumulating as well. But like if you want me to give like a top 5, BTC, ETH, ADA, right, Cardano, Polkadot, and Chainlink, right? These are the 5 that I believe have the best chance of surviving 5+ years down the line, right? These are the ones that I'm actively accumulating, right? Every time that I add more to my long-term portfolio, I'm adding to these ones. Like 100% I'm adding to these ones. The rest are more of like 100x flips. That includes BNB for me, by the way. BNB is like a 100x flip for me. I do see potential for BNB to survive, but with the amount of flack Binance is getting, I'm not sure if that will happen. Yeah, and Sol, right? Solana, I will start to accumulate that as well. But don't take my word. Take my top 5. Just stick to my top 5 for now, right? I'm going to do a more detailed write-up on the best coins, right, so-called. I don't actually own XRP, right? It's not even in my long-term portfolio, right, period. I honestly don't really understand why XRP is getting that much hype. No, I'm not saying Binance will not be in the market the next 5 years. I'm saying that it's risky. Right? It's risky with the amount of flack that they're getting. I don't know if regulators is going to do something to Binance, right? I don't know. At the moment, that is a gray area for me, right? I wish I could give you a clear-cut answer, but at the moment, I don't think it will survive, right? Just based on its current path, right? I will still hold it for like 100x flip, right? My BNB, I bought it back when it was like $15 to $20, right? Average. But I don't think BNB is something you should be starting to accumulate right now. In the DeFi department, Uniswap is actually one. If there ever happens to be, I believe 1 inch could be a 100x flip, right? 1 inch. There's a good chance it could be a 100x flip. Maybe not 100x, but 50 at this, maybe 30 to 50 at this point. But yeah, I'll do a more detailed write-up of coins that I will actively accumulate over time. But for now, that's my top 5. Yeah, Terra Luna, they have a great use case. It's actually in my long-term portfolio as well, Luna. CHZ is in my long-term portfolio as well. CHZ is a really good candidate. It depends on how well they execute their ideas. They have a very good execute. They have a very good idea, but their success will depend on how well they execute it. But I'm fully ready to hold CHZ for the next, I don't know, 5-10 years. I think CHZ could survive. CHZ could thrive, by the way. CHZ is one that I'm actively accumulating as well. But again, really depends on how well they execute this one. Anyways, is there any other questions other than asking me about what my long-term holds? Because that's not what I'm trying to discuss here. Any more questions, mate? Any more questions, mate? Sparky, I would actually, right? I will actually do something sacrilegious here, and we'll actually put ETH on the top. Sacrilegious, I know, but potential-wise, I don't think ETH is number one, right? In terms of surviving and growing, right? ETH is not going to die, and yet it still has potential to grow way more than Bitcoin. ETH could flip Bitcoin, yeah. Is it going to happen soon? Probably not. But just, they are actually trying to change the world, right, ETH? I can't say their execution of their plan has been good so far, but somehow, even with terrible, absolutely horseshit execution, they're still managing to be the top 2 crypto. So if their market cap is already that huge, based on the terrible performance that they're doing, what's to say that once they fix their issues, it's going to flip Bitcoin? Any Muffin asks, any books or resources I'd suggest on long-term investing? Actually, I think you sent me it before, right? The Intelligent Investor, right? That's gonna be one. It's a really fucking long read, but something you should read if you have enough time or have enough interest. But rather than reading books, right? I would actually argue that learn from speeches, right? Interviews with people like Warren Buffett, Peter Lynch, right? It's all on YouTube. Learn from how these investors think, right? Warren Buffett, Peter Lynch, Michael Burry. Peter Lynch and Warren Buffett is where I've learned the most from. And then there's some, other great investors actually. Pro tip for you guys actually. Rather than read books or listen to audiobooks, right? Some of the most knowledge that you will acquire is actually during interviews of these high profile individuals, right? People have done interviews with for example, like Peter Thiel, right? Nobody thinks about Peter Thiel, right? But this guy is a fucking business genius. And then everyone's trying to read his book, like 0 to 1, but then just go listen to him do a live interview, right? When people, that's when they really share about, yo, P1P, just go to bed, bro. Just go to bed. I'm not sharing any more screen stuff anymore. It's just me talking now. As I was saying, some of the best knowledge that you're going to acquire is through live interviews with these people, right? Don't read their books. Books have a certain element of needing to pad, right? You need padding on the books because you need a certain amount of page numbers in order to put it on the bookshelf and to sell it. Whereas oftentimes during these interviews, for example, with people like Kobe, you're going to learn so much, right? They are speaking from the heart when they're doing interviews. Go look up all of these obscure business geniuses, right? People like, I don't know if you've heard of them before, but people like Sam Ovens, Alex Becker, before he got into crypto, he was a business genius as well. Just all these geniuses that are not very high profile. They don't have books, but go look up interviews. Go look up live interviews. You will learn so much. Yeah, Naval as well. Yeah, but books and interviews. Yeah, I'll send more of a list later on. I can't think of ones off the top of my head, but I'll send a list later. Okay, so is there any other more questions, guys? I actually have to bounce. Yeah, I actually have to bounce. Thanks, guys, for staying here for the whole 2.5 hours. I'm always grateful for all of you guys staying here, like always. Oh, you get some rest, Sparky. It's like, what, 5 a.m. over there? You too, Muffin. But thank you, right? I always appreciate you guys staying to the end of the streams. If there's any more questions, right, just tag me in beginner and I'll be happy to answer you. But for now, thank you. Right, have a good Sunday. May the gains be with you. Peace, my friends. Right, I love you guys. Thank you. See you.